guys, welcome to Talking Money with Nosy, personal finance made simple. Today's video is about investing my December salary as well as the bonus that I received. But I'm going to start with how we should invest if a recession happens in 2023. I've been getting a lot of questions about a recession. Nosy, what should I do if a recession comes around? What's going to happen to my investments? Firstly, what is a recession and what causes recessions? Basically, a recession is a period when there is weak or negative growth in the economy, decline in industrial production, a drop in consumer spending, often accompanied by a rise in unemployment rates. Recessions can be caused by supply chain problems, financial crises, high interest rates, falling house prices and falling house sales. And if you think about what has happened in the past 2 years, starting from 2020 right up to 2022 with COVID, supply chain issues, people losing their jobs, high inflation, high interest rates, all these things are a recipe for a recession. I'm not saying that there definitely will be a recession, but many economists and investors all over the world are worried that it might happen. If a recession happens, how then should we invest? Let's go over 3 different investing options that people commonly choose during a recession. Option number 1 is selling everything or trying to time the market, where people pull everything off the market and wait until things get better. This may seem like a good idea, especially if your portfolio is down a lot, but unfortunately, I've got bad news for you. This is a losing strategy. This is an article on the Motley Fool website. I love this website. This is where I do some of my reading about stock markets, about investing basics. If you want to come to this page, I'm going to leave the link in my description. So here it says time in the market versus time out of the market. JP Morgan Asset Managers 2019 Retirement Guide shows the impact that pulling out of the market has on a portfolio. Looking back over the 20-year period from 1 January 1999 to 31 December 2018, if you missed the top 10 best days in the stock market, your overall return was cut in half. That's a significant difference for only 10 days, over 2 decades. Then it says, here's how an initial $10,000 investment performed over the past 20 years, depending on if its investor stayed invested or instead missed some of the market's best days. How much would it be today? Fully invested into the S&P 500, this person never took their money out of the market starting from 1999. In December 2018, their $10,000 investment would be $29,845. If they missed the 10 best days, their initial $10,000 investment would be worth $14,895. If they missed the 20 best days, their initial $10,000 investment would actually be on a loss because the dollar value would be $9,359, and it gets worse as the number of days missed increases. So for 30 days missed, 6,213, 40 best days missed, 4,241, 50 best days missed, 2,985, and 60 best days missed, 2,144. So the person who remained fully invested, never withdrew their money, made more money than all these people who missed out by trying to time the market. Then there's this article by Discovery that discusses the scenario in South Africa. This phenomenon is not just confined to US or global markets. So if you think, oh, well, it's just the S&P 500, that's the American market, it doesn't affect South Africa, well, you're wrong. It says research from Investment Solutions based on iNet Bridge data shows that a 100 Rand investment on the JSE using the all-share index as the benchmark would have grown to 1,760 Rand over the 2 decades between 1995 and 2014. If you had missed the 10 best days of the JSE, your investment would be worth almost half that, which is 965 Rand. Miss the 60 best days and your investment would be worth tiny 143 Rand. They do have a graphic here to try and explain this, but the resolution is so bad, so terrible. But anyway, advocates of market timing will point to the results had the investor missed the worst days, right? So people always say, no, what if I get the timing correctly? What if I miss the worst days and catch the best days? But it says, indeed, the results are astonishing. The same 100 Rand investment would be worth 3,697 Rand had you dodged the 10 worst days on the JSE in the 20-year period. But it's far easier said than done, and over a sustained period is all but impossible. If you could miss the worst days on the market, you'd do better. But the problem is that it's hard to know which ones are the worst days and which ones are the best days, and most people miss it. As you can see, if you sell your investments and try to wait until things get better, your risk of missing the market's best days is very, very high. Option 2 is taking money from your riskier businesses and putting it into more stable businesses. During recessions, some companies do better than others. For example, consumer staple businesses like ShopRite or Coca-Cola, for example, would do better in a recession compared to technology companies. But just like option 1, it is hard to sell shares that are going to do badly before they do badly, and to buy companies that are going to do well before they do well, because after the fact it will be too late, right? If you miss that and start selling things when they've already fallen and start buying things when they've already risen in price, you've missed the boat. For example, the technology sector has already gone down a lot in 2022. So it's not possible to know if technology shares are going to keep falling in 2023, or if they're going to start rising again, or if they remain the same. So this is why diversification is important. Your portfolio should be balanced and not have too many stocks from the same sector. Your portfolio must have technology stocks, healthcare stocks, retail stocks, consumer staple stocks, communication stocks, etc., so that if one sector performs badly, other sectors can balance out your portfolio. Option number 3 is to do nothing or to keep investing regularly. This is because recessions usually don't last very long, and it doesn't make sense to panic and sell your investments or change your strategy because of a recession, especially if you are a long-term investor. So in 2023, I'm going to keep investing every single month, regardless of whether a recession happens or not. With that said, let me take you through my US as well as my Australian dollar investments. Again, let's have a look at the overview of my portfolio. So currently down negative 0.77%. This year has been a very rocky year. Things have been bad more than they've been good. But of course, because I'm a long-term investor, this doesn't bother me much. So my investments are going to go very quick. You guys should know the drill by now because I pretty much invest the same way every single month. So the first investment I'm going to make is in this ETF called Schwab US Dividend Equity ETF. Basically what this ETF is, it's a basket of 104 very high quality American dividend stocks. So today I'm going to buy $253 worth, only buy at ask and place by order. Next is VTI. This is an ETF of more than 4,000 American companies. So I'm going to buy $300 worth of VTI. Today is the 21st of December. That's the day I'm recording this video. It means that I'll be in time for the VTI dividends because I think tomorrow, which is the 22nd of December, I think that's the cutoff date to receive the upcoming dividend. So I'm lucky to be investing now because I'll be in time to catch the next dividend. Place by order. Next, I'm going to be investing in individual shares. Again, I've pre-chosen the shares that I'm going to buy and I'm simply following through what I have planned already. So the first stock that I'm going to buy is Google, buy more, and I'm going to buy $15 worth of Google. Only buy at ask, place by order. The second stock that I'm going to buy is Apple, buy more, and I'm going to buy $20 worth of Apple shares. Place by order. The next stock that I'm buying is BlackRock, buy more, and I'm going to buy $10 worth of BlackRock shares. Only buy at ask, place buy order. The next company that I'm buying is Home Depot. Buy more, $15 worth. Only buy at ask, place buy order. The next company that I'm buying is Intel. Intel is down quite a lot for the year. Buy more, $10. Only buy at ask, place buy order. The next company that I'm buying is JP Morgan & Chase. Here we go, buy more. And I'm going to buy $15 worth, only buy at ask. Next is Lowe's for $10. Only buy at ask, place buy order. Next is one of my favorite shares, Microsoft. Buy more, $20 worth. Only buy at ask, place buy order. Next is Nike. Buy more, $10 worth. Only buy at ask, place buy order. The next stock is going to be Pfizer. Buy more, $15 worth. Only buy at ask, place buy order. Next is T. Rowe Price. Buy more, $10 worth. Only buy at ask, place buy order. The next company that I'm buying is Taiwan Semiconductor Manufacturing Company. Buy more, $15 worth. Only buy at ask, place buy order. Next, I'm buying Target. Buy more, $15. Only buy at ask, place buy order. Next is Texas Instruments. Buy more, and I'm going to buy $30 worth. Only buy at ask, place buy order. Next is Verizon. Buy more, $10 worth. Only buy at ask, place buy order. Last but not least is Visa. Buy more with the remaining amount, which is $15. Place buy order. And that's it. Next is investing in my easyequities Australian dollar account. I've already deposited $298.60. Currently, my Australian investments are down negative 3.1%. So here are my holdings. Let's just have a quick look. BHP, Commonwealth Bank, CSL, Fortescue Metals, Harvey Norman, JB Hi-Fi, Macquarie Group, Mineral Resources, Rio Tinto, Sonic Healthcare, Super Retail Group, Australian Shares Index ETF, Diversified High Growth Index ETF, West Farmers, and Woodside Energy. I'm going to start investing in my ETFs as per usual. I'm going to start with the Vanguard Australian Shares Index. What this ETF is, let's have a quick look. Basically, this ETF, the Vanguard Australian Shares Index, it tracks this S&P ASX 300 index. This is a group of Australia's largest 300 companies. And just a little bit more information about that. Let's scroll down, down, down. Here we go. It says number of holdings. It's the companies that are in the ETF. It's actually 305 shares. The dividend yield is 4.3%. This ETF pays dividends 4 times a year. Let's go back to easyequities and buy more. I'm going to buy $100 worth of this ETF. So here we go, 100. Only buy at ask and place buy order. The second ETF that I'm going to buy is the second ETF in my portfolio, which is the Diversified High Growth Index ETF. Just briefly, what is this about? Just a few facts about this ETF. This ETF invests mainly into growth assets and is designed for investors with a high tolerance for risk who are seeking long-term capital growth. The ETF targets a 10% allocation to income asset classes and a 90% allocation to growth asset classes. The next thing that I want you to see is this allocation to underlying Vanguard funds. So it's an ETF that is made up of a basket of ETFs, if that makes sense. So the total number of ETFs are 7. Let me invest. Again, I'm going to buy $100 worth. Place buy order. Next, I'm going to buy individual shares. The first company that I'm going to buy is CSL. Let's just have a look at what this company is all about. So already it's open. So CSL Limited, this is an Australian multinational specialty biotechnology company that researches, develops, manufactures, and markets products to treat and prevent serious human medical conditions. Its share price over the past 5 years has grown by 104.53%. Not bad. The dividend yield is quite low, 0.95%. Okay, so I'm going to buy $20 worth of CSL. Next, I'm going to buy JB Hi-Fi. Let's have a look again at what JB Hi-Fi is all about. JB Hi-Fi is a consumer electronics and home appliances retail company. So they specialize in electronics. Over the past 5 years, the share price has grown by 69%. Current dividend yield is 7.5%. So let's go back to easyequities, JB Hi-Fi, buy more. I'm going to add $10 worth of JB Hi-Fi. Next company that I'm going to buy is Macquarie Group Limited. Let's have a look at what it's all about. Macquarie Group Limited is an Australian global financial services group. Current dividend yield is 3.87%. Let's go back to easyequities, buy more, and I'm going to buy $10 worth of that company. The next company that I'm going to buy is Sonic Healthcare. Let's have a look at what Sonic Healthcare is all about. So Sonic Healthcare is a Sydney-based Australian company that provides laboratory services, pathology, as well as radiology services. So let's go back and buy some Sonic Healthcare. $10 worth, only buy at ask, place buy order. Next, I'm going to buy Super Retail Group. Again, let's see what it's all about. Super Retail Group Limited is an Australian-based company which owns and operates a portfolio of retail brands across Australia and New Zealand. The dividend yield is 6.57%, and over the past 5 years, the share price has grown by 30%. Let's go and buy Super Retail Group. $10 worth. Place buy order. Next, we're going to buy Wesfarmers. What is Wesfarmers about? Wesfarmers Limited is an Australian conglomerate headquartered in Perth, Western Australia. It has interests predominantly in Australia and New Zealand, operating in retail, chemical, fertilizer, industrial, and safety products. The current dividend yield is 3.91%, and over the past 5 years, the share price has grown by 44%. Buy more. I'm going to buy $20 worth of Wesfarmers. Only buy at ask, place buy order. Last but not least is Woodside Energy. What's this about? Woodside Energy Group is an Australian petroleum exploration and production company. Woodside is the operator of oil and gas production in Australia and also Australia's largest independent dedicated oil and gas company. Buy more. Place buy order. Okay guys, that's it for today's video. If you want to start investing in the stock market and you need guidance, please go to my online store and grab copies of my ebooks for beginner investors. See the link to my online store in the description and comment section below. Also, please remember to subscribe to this channel, like the video. Until next time, bye guys.